Good afternoon everybody. Yesterday I published a brand new analysis research article to Litecoin.com entitled Over $100 billion was transacted on the Litecoin network in 2019. And in this article I dig through quite a bit of data to try and make a clearer picture for how people are actually utilizing the network. There is however only so much you can do with text, which is why today I wanted to go over this in greater detail, as well as show you those charts so I can visually represent the points I'm trying to make. And also as an added bonus, I will be looking at some other assets besides just Litecoin, as further down here I do touch on Bitcoin and Visa as well as a comparison. So I actually start the article off by giving a quick summary, writing, the Litecoin network has seen sustained usage in 2019 despite the wider collapse in the majority of the cryptocurrency markets. Again, this is something I will show in just a minute. And as always, all this data is being provided to us by one of the most underrated crypto data websites, BitInfoCharts. And if we actually quickly hop over and take a look at BitInfoCharts, we get this chart, which is the Litecoin cent in US dollars. Now, of course, the first things you are going to notice which stand out like a sore thumb are these two massive spikes here, and no prizes for guessing what these are. These are the two bull markets, the one in 2013 that lapped over into 2014 slightly, and the end of 2017, beginning of 2018. And as you can see, where we had a lot of speculation in the run-up to the 2017 bubble, we had practically nothing back here. If I just quickly zoom in, see it's completely flat. Perhaps if I go on a logarithmic scale you can see a bit better, but we had this huge jump up, and that's something we didn't really see in 2017. It was much more anticipated, should we say, and that may speak something towards the maturity of the markets now as opposed to back then. And if we zoom out and view the entire chart as a log scale, we'll see that we do have these peaks and troughs, but we have been constantly growing, which is a good and healthy sign. And in fact, if we were treating this as technical analysis, we could say that what we had here was a double bottom, which was then confirmed once more over here before going higher. You see, it didn't actually break down, so we've had this continued sustained usage that has been growing. And this appears to be something a bit more fundamental than just pure speculation, which is why I bring up that word maturity of the markets. And in fact, we can even see up here at the height of 2018, it fell all the way down and seems to have found support at this level, around $52 million every single day at the very lowest. However, most of these transactions are higher than this, which I write about in the article. Yes, there has been a decrease from 2018, however this was mainly due to the bull market peak in January, where $5 billion a day was being transacted. However, omitting this activity in the first half of the year, it appears that 2019 has seen a slight growth in the average value transferred each day from around $200 million up to $300 million, and I'll show you quickly what I mean with that. And in fact, it's easier to go back to linear to talk about this. So zooming in on the entirety of 2018. This is the large usage spike back at the beginning of the year, which very much skews with the data I'm trying to analyze, which is the fundamental usage, not just speculation. So if we take from April to the end of the year, we get a much better picture. And in the article I note that the average seems to be around 200 million, so that is at this level here. Of course we still have this huge amount here which kind of skews with the data, but this 200 million seems to act as a nice trend line from June onwards, with quite a few peaks above it but also many below it, especially in the latter half of the year. This is of course when the markets reached their what we now believe is the ultimate bottom. Now unfortunately there aren't any tools on BitInfoCharts that would just add up the entire value for certain periods, so I have had to do this by eye. But I think you'll agree that around 200 million does appear to be somewhat of a fair figure. And now if we actually zoom out and take a look at 2019, where I report that around 300 million appears to be the average, so this level is 298 million, so close enough, we get this trend line. Now yes, I do admit that these figures too are skewed, mainly by this large transaction volume here, which was speculation surrounding the halving. This is of course a period where one Litecoin was back over $100. And yes, I did include this in the article, declaring 2019 notably saw Litecoin's second halving take place, which resulted in increased speculative activity on the network. Omitting this data as deviating from the mean market conditions would say roughly equivalent value transfer between 2018 and 2019. So if we go back to a figure around 200 million, we get this trend line, which I think is a very fair comparison. Again, we have a lot of troughs below as well as a lot of peaks above, especially in the latter half of the year. And I add in the article, this may speak to a wider base level interest from non-speculative network participants. This base appears to have strongly formed around $100 million a day, with a steady amount of equal transactions around 21,000. So again, back to the charts, 100 million is around here. So this is the 97 million trend line, and you'll see how it seems to have found this floor. There are points which dip below it, but for the most part it seems to be acting as a very steady support. And if in fact we now switch over to the transactions chart, we get this image, which again is quite telling. So I point out that this floor in transaction usage appears to have formed around 21,000, which is, let's say, around here. So this is 21.16k. And again, this pattern is quite striking, potentially hinting at that more fundamental usage beyond speculation. Now it does in fact appear to be giving way over here, so perhaps saying around 19.6, which is what this trend line is, may be a bit more accurate to the overall image. But still, it is somewhat fascinating to see that we appear to have held this intrinsic interest for coming close to 2 years now. And this floor in fact is something that we can see in other network metrics. So for example, this is the average transaction volume, and this appears to be coalescing around this 5k mark, which is this line here. However, notably, if we switch over to the median transaction value, we get a different picture. I'm not quite sure what happened here in November. This may be an anomaly, or it may be in fact one of those dust attacks I've been reporting about. But for the sake of this, I'm going to omit it from the data as deviating from the norm. And by doing so, we appear to find a floor value at around $50. In fact, this level here is 51.6. Now this can mean one of two things. Now either the median value can be getting pulled down due to spam attacks and dust on the network, which I have reported on, however they don't nearly occur with enough frequency to form this pattern as far as I am aware. Or, as I write in my article, it could tell us that this average value is being driven up by a handful of very large value transactions. As such, it may be reasonable to hypothesize that a majority of the value is from a small number of high net worth individuals, funds, or services such as exchanges. And yes, there are ways of doing deep analysis on these networks in order to get a much clearer and definitive picture of what exactly is going on and where this value is being derived from. However, unfortunately, I do not have access to those types of tools, although I would absolutely love to build them. Anyway, while $100 billion is staggeringly large in comparison, it is dwarfed by traditional payment networks such as Visa, which reported a total transaction volume of 11 trillion for the 2018 period. And in fact, I have now found their 2019 figures right here. As always, I will be sure to leave a link down below if you really want to look over these statistics for yourselves. But we can see under the operational highlights that the total volume, including payments and cash volume, in 2019 was actually $11.6 trillion. And just here they declare that this is from 138.3 billion processed transactions, which is an 11% increase from the prior year. And in my article I even note that Visa even buries Bitcoin, which only transacted $2.5 trillion in 2019. And again, if I come and add Bitcoin to this chart and switch back over to the cent value, I'm going to switch over to logarithmic just to null the effects of this spike. And here we can see Bitcoin in blue and Litecoin in red. Both seem pretty steady in the latter half of 2018 before growing in the first half of 2019. And now they both appear to have somewhat steadied out in terms of value sent. And if you actually zoom out far enough, there was this point back in 2013 where Litecoin and Bitcoin were both transacting roughly a similar amount over their networks. And this was around 1 billion. Now, we didn't actually see a return to these levels in the 2017 bubble, so this may show that we are having some divergence. However, the ratio between these assets on this metric is actually quite interesting. So if I come over here and find some correlating points, and let's just take these 2 points for example because they are both peaked and appear to be in sync with each other. So for Bitcoin this is 12.8 billion in a day, and for Litecoin this is 3.61 million in a day, rounding both of them up. And if we take both of these figures and put them in a percentage calculator, so Litecoin is 361 million and Bitcoin was 12.8 billion. And if we actually calculate this as a percentage, we're coming out to 2.8, which is actually, comparatively speaking, not too far off the Litecoin-Bitcoin ratio. In fact, it makes Litecoin look undervalued in comparison. So if I put 2.8 on this chart, that is in fact this level up here. And in fact, half of 2.8, if I just copy this, so 1.4 is down here, and half of 1.4, so 0.007, is around this level here. Now I'm going to preempt this by saying, yes, I know you cannot just take the total value being sent over networks and use it as a trading metric as such. However, I do find it quite interesting that the ratio between the values being sent on these networks is actually quite similar to the ratio between Litecoin and Bitcoin on the market. Of course, again, if I had access to be able to take a lot of these data points and just give me all the figures between them by putting them through a percentage function, then we would get a much better average. And yes, I know that cent value is somewhat of a terrible metric in itself, mainly down to the fact that, say I had 100,000 Litecoin, I could myself write a program that sends that money over the network 1,000 times a day. And this would of course greatly inflate those organic fundamental numbers I am looking for. It is possible to prune that noise with further analysis, but again, I don't have access to that here unfortunately. So we do have to have a little bit of faith in these figures and trust that there aren't that many people out there just spamming the network trying to inflate this ratio for whatever reason they see fit. Anyway, back to Bitcoin and the Visa comparison. And while, yes, if I come back to linear here and remove Litecoin just to get a better image, we see that Bitcoin's trend line for value being sent is more akin to $8 to $9 billion a day on average. Again, of course, this is skewed by this, and this is an absolutely monstrous spike of 250 billion in a single day. Crazy. And if we take this trend line to serve as an average, then this does equate to over $2 trillion for the year, which is absolutely amazing to say this technology is just over a decade old now. However, there is still a very, very long way to go, and the comparison between Bitcoin and Visa is a flawed one, although people like to bring it up very often, and I explain this in the article, writing, the comparison between the two is flawed, mainly because Litecoin and Bitcoin are cryptocurrencies and Visa is a service for fiat currencies. It's not its own currency. As such, it does not take into account the total value sent in US dollars and only gives you a small insight into one area of the larger market. This does, however, mean that there is a long way yet to go and lots of room for crypto markets to grow if they are to achieve that goal of displacing the old guard. Of course, the old guard is M1, which, as defined by Investopedia, is the narrow measure of the money supply that includes physical currency, demand deposit, traveller's checks and other checkable deposits. It does not include financial assets such as saving accounts, bonds and stocks, for example. And for this to in fact be the case, the entire Bitcoin network needs to be valued at over $20 trillion, which would in fact put Bitcoin at very close to, if not directly on, $1 million a coin. Of course, M1 is constantly increasing and getting further away from us, so we are forever playing catch up. And finally, the last thing I wanted to talk about today was the ratio between Ethereum and Litecoin, because I had a very funny interaction with somebody on Twitter regarding this. So on this chart we have Litecoin in red and Ethereum in blue. And I was in fact prompted to take a look at this when a person going by the name of Bruno responded to the previous article I did, discussing the fact that 40 million Litecoin have remained dormant for over a year. And in fact I also have a video on this channel discussing this story, which I will leave linked below. Anyway, Bruno wrote to me saying, "That's not hodlers by the way, just an indication that literally nobody is using this joke." Now I'm still not entirely sure why he went out of his way to make this comment. He doesn't follow Litecoin.com, he doesn't follow anything Litecoin, so however this came into his vicinity, I have no idea. But just taking a very quick look at Bruno's profile, it is very clear that he is balls deep in Ethereum and nothing else matters. And you know what? Each to their own. But when you come at me with such a stupid statement, you know I'm going to fire back. So I opened up this chart and I took a look, and I proceeded to add all these points up, and I think you know what comes next. So I responded to Bruno, writing on-chain value sent from December to today. Litecoin, just over $8 billion. Ethereum, $7.65 billion. Anyway, in response to this, I got a total non-argument back from Bruno, where he writes, "Outperforming me? LOL. A high-value turd is still a turd. See Bitcoin." Not even a rebuttal to the objective reality in which we find ourselves, just a subjective, yeah, it still sucks. And I think George summed it up here quite nicely, pointing out that someone's a little bit salty. And again, if the ratios on these values being sent on the networks hold any truth, and can be used to help fundamentally price these assets and their networks, then it may suggest, if we use Bitcoin as a benchmark, that Litecoin is not only slightly undervalued, but Ethereum is greatly overvalued and should definitely be in the double digits. But then again, I've already pointed out some of the flaws in this methodology, so perhaps it's best just to take it as an interesting thought experiment. And with that, thank you very much for watching. I hope you enjoyed this video. As always, be sure to let me know what you think down below or on Twitter. I do enjoy reading what you have to say. If you liked this video, be sure to leave a like on it, and while you're down there, why not also subscribe as well. And as always, I will see you next time.